Hi, this is Jack from Alpha Charts with a state of the market video. Today is September 25th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's start with the SPX. And this week, we had a big gap down on Monday, inside day on Tuesday, right? And then off to the races and recovery the rest of the week. So Monday and Tuesday really looked like that the path of least resistance was going to be lower, right? But it didn't happen, right? So we recovered, and not only did we recover, but we got back above these moving averages. And I think that's significant because, we had a bearish cross on the moving averages over here. And we haven't seen a bearish cross on moving averages, for some time. It's been, for the most part, smooth sailing. There was a tiny one right here, a small one right here, but it's been pretty good uptrend. This was the first real bearish cross on these moving averages, but the buyers came right back in and went ahead and bid this back up. And I think that is definitely very, bullish scenario that they came right back in. Again, lower volume, yes, but I'm not putting a ton of stock into that on the index. I think overall we have to say that's a positive reaction in the market. Okay. Looking at the RSP, which is the equal weight. So I had drawn this in, a couple weeks ago of possible ways to go. Now, obviously, this area did not hold a support. We gapped down below it. And then RSP, the equal weight, came back and got back above it rather quickly. So I think, again, that's a bullish situation in my opinion, right? So you gap down, the Bears had the ball and they couldn't take it. They couldn't fumble it. I thought we would test 145, 146 pretty easily. But that just didn't happen. It just they came literally charging right back and recovered the important level, closed the gap. And again, I thought maybe when they closed the gap, then we could potentially roll over. Nope. Hitting these moving averages from the underside and this potential area from the other side, maybe that would cause some resistance. Nope. I mean, just literally went right through it. So it's a pretty strong reaction, right? So I think that is definitely in the bullish camp for right now, at least. Looking at the Qs. Again, same exact situation, gap down below this area. And then the bulls stepped in and literally bid it right back up. And this bearish cross right here looks like it's about to be reversed with a little more upside resolution going to next week. So far, so good, right? Looking at the equal weight. Here was a trend line I was watching. We could probably do something like this. Doesn't matter. It didn't really matter this trend line, right? But it kind of gapped below it. Again, equal weight Qs, it just came back all the way. And you just saw buyers really showed up into the end of the week. So I think that's the most important takeaway from this. Again, this one is still underneath the moving averages, but it's trying to now get back above it. So I think a lot of positive action the second half of the week. I mean, completely changed my mind from a very bearish outlook here to a very bullish outlook here going forward. So IWM, again, big gap down, and then the buyers just stepped in and right in the middle of this range, right in the middle of this this just longer range. We're going on what, 9 months now, 9-10 months of just sideways chop. I mean, this is digestion at that, digestion of this bigger uptrend, most likely. Obviously it could, resolve either way. The prior resolution, the prior trend was higher, so it should go higher, right? It should break out, but it hasn't yet. It shouldn't break down, but it hasn't yet, hasn't done anything yet. And just so the sideways chops continues. So in IWM, I mean, risk on, risk off. I mean, I'd like to see that lead, like back here in November, and maybe this November it starts to lead again. At the end of October is when this gigantic run went, which is, roughly a 43% run happened in the IWM in a very short period of time, like 2 months, and then sideways digestion maybe for a year. But heck, if we get another big run like this, don't know if it'll be 43% again or not at the end of the year, November, December, Santa Claus rally, whatever you want to call it. I think that'd be awesome, right? So there's your sideways chop. We're looking for resolution. If it resolves above 233, 234, it's full board bull market again, I think. All right, moving on to XLF. Actually, let's go IWO, because I look at this sometimes. IWO, which is the small cap growth ETF, looks exactly the same way. Would love to see this resolve higher. Hasn't quite yet, but we're looking for an upside breakout above 319.50-ish. XLF. So interest rates are starting to tick higher, right? We know that. And let's just go to TNX real fast. Look at the 10-year. So you had the 10-year, we had a big up with this retest, and now it's trying to resolve back above this one, I think 1.5, 1.498, 1.5-ish. If it gets back above that, and it'll probably get back above this downtrend line right here, I think that interest rates are going to be going higher. So what does that mean for financials? Well, chances are financials are going to be going higher. Now, financials are participating in this market. I think overall, the market as a whole is going to be, doing very, very well. And so we're seeing that. And we'd love to see this breakout above $38, $39. And I think, so XLF, it's been consolidating since, we'll call it May, moving sideways, but the trend was higher. And this looks like it wants to break out. So again, it looks like it's at least going to start participating again pretty soon. Hasn't quite yet, but it's going to, it looks like. So I think that's definitely a positive for the market. Semiconductors, still a nice uptrend. It recovered like everything else. Hasn't made new highs yet, but it's going to. It looks like pretty soon, above 277-ish. So again, SMH participating. That is the bullish scenario. Love to see that. So probably the most important sub index, out there, sector index. Let's see what else we got here. Lumber peaked back in May, came back, chopping around, again, sideways consolidation. Not much of a signal in lumber right now. When it makes its move, chances are we're going to know which way. I think this $83 though is really important. It's got to be above $83. Below $83, and I think that the market may be in a little bit more trouble down the road. Bond yields. So bond yields is actually what kept me from being too bearish at any given time, because breadth was decreasing. And let's chart a little bit. Breadth was decreasing, but bonds never confirmed, right? Bonds never confirmed. You got this little tiny uptick right there, which was nothing, and then it rolled right over. So again, we're below the 1.52, we'll call it, range in this ratio. We're not seeing big spikes of any real sort, of any real kind. And so the bond ratio never confirmed weak breadth. And I think that was that's what I was looking for, and it just never happened, which is what got me more bullish also. And let me flip quickly, right? So even though the markets on Monday and Tuesday look pretty bad, without the confirmation from the bond market, and again, there's a ton of wall of worry type stuff, whether it's Chinese building companies, or debt ceilings, or COVID variants, or who knows what else is coming on, infrastructure bills. If they thought any of those really mattered, we would see it here, and we're not seeing it here. So that's all noise. And I think it's important to filter out the noise, because it's just not happening. It's just not being priced in, right? Any of those catastrophes that may be looming out there. The VIX, you had the big spike, and then it came right back in. Nice, beautiful thing. Again, still seeing, lower highs on the spikes too, which is kind of nice to see. VIXN, again, same thing, lower highs on the spikes, came right back in pretty quickly. Put call ratio. So the put call ratio is still showing, a bullish range without any extremes. So I think that continues, right? I mean, we never got to an extreme, any which way. I would have loved to see an extreme on the bear side, on the bear side, but no, I mean, just a bullish range. That's all we see here. So there's no signal either way, except for maybe, choppy bullish range. Looking at some breadth studies now, percentage stocks above the 50-day. We made a higher low again and potentially a lower high. So we're still in this consolidation pattern, and we'll see which way it resolves on the breadth. So we could kind of do something like this. And then we could probably do something like this, right? I mean, not the greatest thing, but we'll see. Does this resolve lower? Does this resolve higher? Right now, though, it's just kind of consolidating, and breadth is looks like it's starting to recover some, but we'll see. This 50% line, I'd like to see it get above that. And again, it's right there, but again, not doing anything wrong at this point. Gold supposedly is a safe haven. Well, if there's some issues, coming, you think people would be piling into gold. We're just not seeing that. It still makes no sense as a trade, and as an indicator, it's telling me that there's not too much worry in the market. Now Bitcoin. Let's find Bitcoin here. Here's Bitcoin. So Bitcoin had this, nasty solve with China banning Bitcoin, whatever. And in the end, though, as a risk on, risk off, looking at that, from a indicator perspective, with all the bad news going around, it's just holding in there. It's not doing anything terribly wrong. Let's see what the moving averages look like on here. Yeah, so they're crossed into a bearish cross right here. And so we'll see what happens with Bitcoin. Again, it's just something I look for, as a risk on, risk off indicator. Maybe, I think it's probably, it's a risky asset. There's no doubt it moves very quickly. So I'm just kind of seeing how that correlates with the market. So right now it's got a little bearish, with lower highs here. The longer term perspective, it looks absolutely fine. So there's my my Bitcoin analysis. Not too great. All right, moving on here. So let's go and wrap this up with the Qs. In the end, we had a lot of fear coming into the market early on, but then the bulls stepped in. We're back above the most important. We're above the most important level right here, and it looks like things want to move higher. So all in all, market recovered nicely. I still think that this area, or you can even say maybe this 360 area. Let me just move that down here, because I think now this tends to be more important, right? Let's just adapt to what the market's telling us. That's where it stopped going down. That's the important spot, right? I put this spot in because that seemed important, because it stopped going up here for a while, but here's where it stopped going down. So that's important right there. Yeah. So as long as this low holds, which is 360.93, market's fine. Market's fine. Nothing to worry about. We break 360.93, then I think we're going to be down here at 339-ish, pretty quickly, and that's a major area. I think 339 is the major area. But right now we're not even close to that. Again, it recovered well. This type of quick bounce back gets me bullish. Again, not saying it's going to go straight up from here. It may have to contend with some supply right there. But coming, especially, we're leaving September, right? One more week in September. Then we got October, and then a very, very bullish time of year is happening when we get into November. So just know seasonality wise what's going on too. All right. Well, you guys have a good week. Hope you like this video. Again, like and subscribe to my YouTube channel. It really does help me out. Find me at Alpha Charts 365 for charts and scans and my comments and thoughts every day. All right. Thanks again. Take care. Bye-bye.